Hello, welcome back to the session, everyone. So, we are in the third day of our discussion, and in the past 2 days, we were discussing about the areas of ethics, corporate governance, reporting, and the core area substantive procedures. And in this part of the session, we will be discussing mainly the areas of audit, risk, as well as the areas of internal controls. We'll be discussing about all important points which we need to consider while writing answers in relation to both of these areas. So, starting with the area of audit risk first. So, will we know that when it comes to the area of audit risk, it is the risk of giving an inappropriate opinion on the financial statements. So, there is always a possibility that the auditor might be expressing an inappropriate opinion on a company's financial statements. And the possibility of giving an inappropriate opinion on the company's financial statements will be known as the audit risk. Therefore, as an auditor, it is always our responsibility to consider all possibilities of mistakes in the company's financial statements. We should be properly going through the scenario to understand and to get a proper picture on all possible mistakes in the company's given scenario. So, when it comes to the area of audit risk, well, we know that it's a combination of three different risks, which includes inherent risk, then there will be possibility of having control risk, and there will also be detection risk. So these are the basic three set of risks that will be arising in the scenario. There will be audit risk, inherent risk, control risk, and detection risk. And when it comes to the area of inherent risk, it means that there is always a possibility that the auditor might be able to identify a mistake in the company's financial statement. So basically, this risk arises only because of the inherent limitations of the accounts. So before considering related controls, it's always a possibility that there will be mistake in the company's financial statements assertions, and the possibility of mistake that exists in the financial statements assertion will be known as inherent risk. It may be due to the nature of the company's activities. Say, for example, if the company is involved in a lot of foreign currency transactions, the possibility of having mistakes will be high. If the company is using a lot of judgments, in case of the judgments, the possibility of having mistakes in the judgments will be high. Consider that the company is mainly involved in the manufacturing and selling of gold related ornaments. And when it comes to gold, such as an inventory, it's always a price sensitive inventory. So the cost and NRV of the inventory valuation might go misstated if it is not appropriately treated. So all this will be considered as part of the inherent risk. And when it comes to the control risk, there's always a possibility that the company's internal control system might not be operating properly. And if the company's internal controls are not properly operating, there's always a possibility that the financial statements might be materially misstated due to the deficiencies in these controls. So that is something called control risk. And when it comes to the area of detection risk, again there is always a possibility that the auditor might not be able to identify a mistake that exists in the company's financial statements. So all of this will together form the audit risk. So you have to consider the possibility of having inherent risk, control risk, as well as detection risk in order to identify the possibilities of having mistakes in the company's financial statements. And when you get a question on the audit risk, the examiner will be asking you to identify and explain the audit risk, and they will also be requiring you to provide the audit response as well. So you need to identify the audit risk as well as you need to give the auditor's responses also in relation to the scenario. So when it comes to the identification of the audit risk, first of all, you need to identify the fact in the scenario. So whatever it is mentioned as fact in scenario should be identified. Secondly, you need to mention the accounting treatment required. Whatever be the accounting treatment that is required for the scenario should be provided. Then third, you should mention about what will go wrong. What will go wrong in the scenario, that should be clearly given. And finally, you need to show the impact on FS. What will be the impact on financial statement, that should be provided. So this is how you should be referring to the audit risk answers. So you need to identify the fact in the scenario. You need to mention the accounting treatment that is actually required. You need to show what will go wrong in the scenario and mention about the impact on financial statements. So while writing this, you should make sure that you are clearly specifying the actual accounting standard required. Say for example, if it is mentioned in the scenario that there is a legal claim against the company. So what is the standard which is relevant for legal claim? It's IS 37, provision contingent liabilities and contingent asset, and as per standards, it is mandatory for a company to recognize provision in case of probable future cash outflow, right? And what will be the possible mistake there? There can be chances that company might not have created adequate provision, and what will be the impact? The provision of the company will be understated and the company's profit will be overstated, and that will be the impact, right? So this will be the same way in which you need to express answers relating to audit risk. So you need to identify the risk. You need to mention that during the current year, Allen Company is having a legal claim raised by the company's customers for faulty inventory. Therefore, as per IAS 37, the company should have created provision for probable future cash outflows. However, there can be chances that the company might not have created adequate provision, resulting in understated provision and overstated profit. So this will be the audit risk in that case. And as an auditor, you need to give a response also. So when it comes to the auditor's response, first of all, you need to include the procedure that is actually required, plus the document or whatever be the information that is required that should be clearly specified, plus the purpose for which the procedure is performed, that should also be given. So say for example, you have to literally consider it on the basis of scenario. What went wrong here? So what went wrong here? There's a possibility that the company might not have recognized provision. So how can we understand that? So you think in that manner. So you need to write a procedure. What you can do as procedure? You can inquire with the management, right? So you can inquire with the management or discuss with the management about the rationale on the basis. You can inquire with the management whether they have created adequate amount of provision in relation to the legal claim raised by the customers and consider whether the amount is reasonable. So how can we make it as a procedure? Discuss with the management whether they have recognized adequate amount of provision in relation to legal claim by the customers and consider whether it is reasonable and are in accordance with standards. So this will be the auditor's response. Same as that, consider that the company have spent 20 million on research and development. So which will be the applicable standard there? So when a company spend significant amount on research and development, well, we know that as per IAS 38 intangible asset, the research expenses should be expensed in the P&L and only development expenditure should be capitalized, right? And what will be the risk in that case? There will be possibility that company might have recognized the research expenses as part of the company's development expenditure, which would result in overstated intangible asset and understated expenses. So that will be the risk in that case. So we will be mentioning the same thing as part of the identification area. The company have spent, Allen Company have spent 20 million on research and development. So therefore, as per IAS 37, intangible asset, any amount spent on research expenses should be expensed in the P&L and the whole amount of development expenditure should be capitalized. However, there can be chances that the company might have recognized some of the research expenses as part of development expenditure, resulted in overstated intangible asset and understated expenses. So this is how you're going to state the audit risk. And what should be the response in that case? You should first write the procedure. Obtain. What you can obtain? The breakdown of research and development expenditure in order to confirm whether the split between research and development have been done in accordance with IAS 38 intangible asset. That will be your response. So you should be clearly specifying this. However, in some cases, there will also be possibilities of having risk without accounting treatment. So in case of risk without accounting treatment, you need to just explain how it becomes a risk. That is what you need to do. So say for example, first of all, you need to identify the risk. Maybe it may be mentioned that the company have appointed a new finance director who is not having experience in the client company's business. It may be stated in the introductory paragraph that the client company is having a pharmaceutical business, and further it may be stated that the new finance director who is appointed is from a banking sector. So what will be the risk there? Well, we know that for the new finance director, they might not be familiar with the client's accounting policies, transactions and balances. Therefore, there can be chances of having inappropriate accounting treatment suggested by the finance director, which would result in material mistakes in the company's financial statements. And what should be the response? Okay, we can respond, as a response, we can discuss with the new finance director about their qualification and experience in order to understand whether they have attended any training in order to perform properly in relation to new transactions in the client company. And in addition to that, we can also review the judgmental areas and the accounting treatment suggested by the finance director to understand whether they are complying with the relevant legislations. Okay, so this is how we will be specifying the risk and their response. So you should be making answers specific to the scenario. You should be considering the risk as well as the responses properly to understand and write the answers to get high scores in area of audit risk. And in addition to this, examiner have given us clear guidance on how we need to select the risk and write its responses. See, it is mentioned that basically whenever you write answer to a risk, so these are the examiner's comment. So when you write answers to a risk, you will be getting half mark for the identification part, and when you explain it, you will be getting another half mark, and for providing appropriate responses for each of the risk, you will be getting 1 mark. And for sure, in the scenario, you will be having more risk as than what they have actually asked you to write. So say for example, if they are asking for 7 audit risk from the scenario, definitely there will be more than 7 points. So you should read the question completely, identify all the proper risk, and then prioritize it the basis on your knowledge. Whichever risk you think that you will be able to properly present as answer should be selected, and you should be writing that one first, and then only you should go on to the other risk. And in addition to that, make sure that you are also properly going through the opening paragraph, because when it comes to the risk area, the opening paragraph will also be very important, because there will be risk in the opening paragraph as well. Especially it may be mentioned that it's a new client in the opening paragraph, so that should also be properly considered. And again, in addition to that, you will be allowed to copy paste the risk. So from the scenario, you can directly copy a risk and paste it to your answer. But when you copy paste the risk, make sure one thing, that you are actually identifying the risk. There will be cases where the students will literally just copy paste the sentences directly to the answer without realizing that there is no risk in particular sentence. So you should include only those sentences which have significant risk. Then again, make sure that when the candidate is including the answers, you should not duplicate your answer. Suppose say for example, if there are 2 risks which is leading to the same impact, then there is no point of giving it a separate risk. So combine those risks together and give the answer. So say for example, if it is mentioned that the inventory days is increasing, and in another case it's mentioned that the company is having some faulty inventory. In both these cases, in case of inventory days rise as well as in case of faulty inventory, the issue is with the valuation of the inventory, that the inventory will have to be valued correctly in accordance with IAS 2, and the impact will also be the same, that the expenses will be understated and the value of inventory will be overstated. So there is no point of writing and duplicating the same risk in 2 different areas. So instead, combine both scenarios together and write it as a single risk. And again, when you write the risk, make sure that you are not just specifying misstatement. Okay. So when you write the risk, you should not be just specifying that there's a misstatement in the answer. Instead of writing misstatement, you should be clearly mentioning to what is actually misstated in the scenario. Whether it is understated or overstated, you have to refer to that. So you should not just merely mention that the financial statements will be misstated. Instead, if it is relating to a misstatement in the company's financial statements, especially in case of PP, if the PP is misstated, you should specify whether the balance of PP is understated or overstated. Clear? Then, again, the explanation of risk should also be very clear, and it should be based on scenario. You should specify whether the financial statements are impacted or not. So there can be chances where the financial statements will be impacted, rather than just specifying whether the financial statements are overall impacted. You need to clearly specify whatever be the impact that will be occurring in the company's financial statement, that should be provided. Then in relation to the risk, you should also be providing proper responses as well. But when you give the response, make sure that the response should be practical to the scenario. You should be writing responses in relation to the scenario itself. You should clearly specify whatever things that went wrong in the scenario, that should be addressed by providing the responses. And the responses is not required to be too much detailed, but at the same time, it should be the auditor's response. Make sure that you are writing the auditor's response itself. So say for example, if there is something is mentioned in the scenario that the finance director or if one of the employees is not adequately trained, you should not give the responses as a suggestion that the particular finance director or the particular employee should be provided with sufficient training. This is what we usually used to do in the area of test of controls. Sorry, in the area of audit, internal control recommendation. But that is not the case here. In this scenario, you are not required to provide the management's response. Instead, you have to mention what the auditor need to do. If an employee or the finance director is not having experience, in that case, what we need to do? We need to check more of transactions relating to this particular employee. So if the employee have done some of the judgmental areas, so we need to review that judgmental areas. So we need to consider whether there is any mistake is happened in the company's financial statement due to their lack of knowledge. That is what the auditor needs to consider. So you have to follow this and make sure that when there are situations where there will be importance of using professional skepticism on the basis of scenario, but you should not just merely refer to use professional skepticism. Instead, you should be clearly specifying additional procedures also. The professional skepticism alone will not score good marks. So this is what you need to consider in performing audit response in relation to the risk which you have identified from the scenario. Okay. So audit risk is one of the core area of our syllabus. So make sure that you are very much familiar with the questions in relation to the audit risk. So this is what you need to consider while writing answers in relation to the area of audit risk. And one more thing, in addition to this, you should also be properly specifying the analytical procedures as well. So there will be cases where the examiner will be asking you to perform analytical procedures also. And when the examiner asks for analytical procedure, you can consider calculating the ratios, which includes gross profit margin, operating profit margin, inventory days, receivables days, payables days, then current ratio, quick ratio, interest cover ratio. Okay, all these ratios can be calculated. But when you calculate the ratios, make sure that you are calculating ratios for both the current year as well as for the previous year. And you are not required to include any formulas or any computation in your answer. You are only required to provide the final answer. Consider that in the prior year, the company's gross profit margin was 20% and in the current year, it's 25%. And the operating profit margin was 18% and 20% appropriately. And inventory days was 100 days in the previous year and now it becomes 140 days. Okay, and same for all the days, okay. Current ratio was 1.9 and now it's 0.6. Quick ratio is 1.8 and now it's 0.5. Interest cover ratio was 2.1 and now it's 0.9. So this is what you got as the computation results. So the company's GP margin has increased and correspondingly operating profit margin has also increased. So when a company's GP margin and OP margin is moving in the same direction, you are not required to consider any mistake in that case. However, when these are moving in inverse relation, say for example, if the gross profit margin of the company has increased from 20% to 25%, but the operating profit margin has been decreased from 18% to maybe 16%. So this is something called the inverse relation. So when there is inverse relation between gross profit margin and operating profit margin, so basically this is because there can be chances that if the company's GP margin has increased, then there will be possibility that the company's revenue might have increased or the company's cost of sales might have decreased. And when it comes to the operating profit margin, there can be chances that either the operating expenses might have increased or the revenue might have decreased. So in this case, we will take the net of the effect. So the company's cost of sales is decreased and the operating expenses are increased. That is what the things might have gone wrong in the scenario. So if the GP margin has increased and OP margin has decreased, we will assume that the company's cost of sales is decreased and the company's operating expenses are increased. So there can be chances of having misclassification of expenses, which means that the expenses that need to be included within the cost of sales might be misclassified into operating expenses, thereby leading to overstated operating expenses and understated cost of sales. So you can mention it as a risk. Again, the company's inventory days has increased. So well, we know that when the inventory days has increased significantly, it represents a possibility of having slow moving or obsolete inventory. And when there is slow moving or obsolete inventory, it should be recognized to the lower of cost of NRV. However, there can be chances that the company might not have done that, resulting in overstated value of inventory and understated expenses. And when the company's receivables days are increasing, there will be possibility that the company's receivables days might be increased, maybe due to the possibility of having bad and doubtful debts for the company. And in case of bad and doubtful debt, either allowances for receivables have to be recognized or bad and doubtful debts should be written off from the financials. And if not, the value of receivables will be overstated and the related expenses will be understated. And when it comes to the other ratios, you can consider all of these ratios together. And well, we know that considering the favorable ratios, GP margin and OP margin should increase. Inventory, receivables and payable days should decrease. Current, quick and interest cover ratio should increase. So these are the favorable movement of the ratios. And now you have to pick all the adverse ratios. Here in this scenario, operating profit margin has decreased, inventory days, receivables days, payables days have increased significantly. Current, quick and interest cover ratio has also decreased. So all of this represents a possibility of having uncertainty relating to going concern. And in case of uncertainty relating to going concern, it should be adequately disclosed in the company's financial statements. And what will be the risk here? There can be chances that the company might not have given adequate disclosures, leading to material mistakes in the disclosures of the financial statements. So that will be the result of analytical procedures, and this is how we need to state the answers here. So this will be the way in which we will be identifying and interpreting each of the risk based on analytical procedures. So these are the things which you need to consider while writing answers in relation to audit risk. So when it comes to the risk based on inventory, receivables and all, you can relate the issues from the scenario to the ratios calculated. Say for example, if it is mentioned in the scenario that there are some concerns about the credit worthiness of the customers, you can combine the ratio and that risk together, and you can mention that there are some concerns about the credit worthiness of the customers, in addition to which the receivables days has been increased as compared with the prior year. Or there are some issues with the faulty inventory in the warehouse, in addition to which the company's inventory days has been increased from 100 days to 140 days. You can mention that. So you can write the risk considering the things that are mentioned in the scenario with that of the analytical procedures together and give your answer. So this is how you need to consider in relation to the questions of audit risk. Then again, another most important area of our syllabus, that's the area of internal controls. Internal controls. So when it comes to the area of internal controls, so there is a possibility that you will be getting either a question based on internal control deficiency, recommendation, and test of control. Or on the other hand, you will be getting a question on direct control and its test of control. So to get proper or good marks in this area of internal control, you should be having proper understanding on each of the systems of internal control. Well, we have studied six systems in total relating to the internal controls. We have studied the sales system, then we have studied about the purchase system, inventory system, bank and cash balance. Then we have also studied about the payroll system, then revenue and capital expenditures. So in total, we have studied about 6 systems in relation to the company's internal control. So you should be having proper understanding on each of these systems. Say for example, when it comes to the sales system, we have studied that only those sales recorded if the approved sales order form and shipping dispatch documentation are present, to confirm that we are recording only those sales that have occurred during the current year. In addition to which, we have also studied that the task of taking order, recording sales and receiving payment should be allocated to different staff members, which is part of segregation of duty, which we basically make sure that the possibility of having fraudulent transaction is avoided. Then we have studied that all the invoices should be sequentially numbered, because if any of the invoice have gone missing, then the company should be able to trace that. If not, there can be chances of having sales being unrecorded. We have studied that all the sales orders should be sequentially numbered. If not, if any of the sales orders have gone missing, company will not be able to trace that, which would result in unfulfilled orders, customers will be dissatisfied, and there will be loss of revenue for the company. So we have studied all of this risk, right? So these deficiencies will be able to be identified from the scenario only if you are having proper picture on control activities. So make sure that you have revised whole area of control activities thoroughly, and then start with the question practice from this area. So the examiner will be asking you to identify the deficiency from the scenario. So once you are familiar with the control activities that are required, whatever control activities is absent in the scenario should be considered as deficiency. So first of all, you need to identify the deficiency in the scenario. Secondly, you need to explain the deficiency. And third, you need to show the impact on entity. How this deficiency is going to affect the entity, that should be shown. So say for example, consider that if it is mentioned in the scenario that the sales orders are not sequentially numbered. So you should mention that if the sales orders are not sequentially numbered, what will happen in that case? If any of the sales orders have gone missing, company will not be able to trace that. And what will be the impact that will be created by the particular deficiency? If the deficiency is present, then automatically the customers will not be receiving products on time. The customers will be dissatisfied. And what will be the further impact? There will be loss of revenue for the company. So this is what you should state as deficiency. You will be mentioning that during the current year, company have not recorded sales orders using sequentially numbered sales order form. Therefore, if any of the sales orders have gone missing, company will not be able to trace that. It would result in unfulfilled orders leading to customer dissatisfaction and loss of revenue for the company. So that will be the deficiency. Then once the deficiency is given, then you have to give the recommendation. What should be the recommendation in this area which you can give? What needs to be actually done? So whatever things that need to be actually done by the auditor will be called as the recommendation. So here what we need to actually do, all the sales orders should be sequentially numbered and a sequence check should be performed to identify sequence breakage. That should be the recommendation. And then you need to show the test of control that is actually required. And when you write the test of control, you need to mention the procedure plus whatever be the document or information required. That document or information should be provided, plus the purpose for which you are obtaining that document, that should also be clearly specified. So when it comes to the procedure, it can be inquire, ensure, analyze, agree, compare, consider, reconcile, any of those. And your document, the document can be the same document about which you are discussing in the recommendation part. And the purpose will also be to confirm whatever be the recommendation you provided, that will be the purpose. So whatever be the recommendation you have given, that should be tested as part of the test of control. So in this case, what we need to confirm? We need to confirm whether the sales orders are sequentially numbered. So what will be the document? Sales orders will be the document. So how can you do that? Obtain a copy of sales orders or obtain a copy of sample of sales orders in order to confirm whether they are sequentially numbered. So that should be the recommendation. That should be the test of control. Then again, another example, it may be mentioned in the scenario that the bank reconciliation statements are not prepared on monthly basis. What will happen in that case? If the bank reconciliation statement are not prepared on monthly basis, then there can be chances that there will be unreconciled balances. Any mistakes that were mistakes that were there in the company's financial statements will remain uncorrected, and the possibilities of having fraudulent transaction will increase. So that will be the deficiency. And what should be the recommendation in that case? All the bank reconciliation statements should be prepared on monthly basis and it should be reviewed by a senior official. That will be the recommendation. And how can you test that? Review a sample of or review the copies of monthly bank reconciliation statement in order to confirm whether they are prepared on regular basis and are being reviewed by a senior official. So that will be the test of control. And again, another example. Consider that the purchase orders of the company are not authorized. So what will happen in that case? You can identify the deficiency. Purchase order of Allen company is not authorized. Therefore, there can be chances that employees might place orders for their own personal purpose, or unwanted orders might be placed, resulting in unwanted cash outflows for the company and fraudulent transactions. What should be the recommendation? All purchase orders should be authorized by a senior official, and any unauthorized order should not be processed further. How can you test that? You can review sample of purchase orders in order to confirm whether they are authorized by the signature of a senior official. So that will be the test of control. So this will be the way in which you will be presenting your deficiency, recommendation and test of control in the scenario. However, when it comes to the paper AA, now you can expect a question on direct controls and its test of controls as well. Direct controls and test of controls. So when it comes to the area of direct controls and test of controls, first of all, we need to identify the direct control. Secondly, we need to explain it, and we need to show the impact. So to do each of these, you should be having first of all knowledge on what is actually meant by direct control. So direct controls are the strength in controls which will help a company's financial statements to maintain appropriately. So the direct control will prevent, detect and correct the misstatements in the company's financial statements. So this strength in control can be called as the direct control. So while identifying the direct control, you should be focusing on the strength in control, explain how it becomes a strength, and show the impact on company's financial statements, how this is going to help the company's financials. So say for example, consider that it may be mentioned in the scenario that the bank reconciliation statement is prepared on monthly basis. So you can mention that the bank reconciliation statement of Allen Company is prepared on monthly basis. Therefore, the possibility of having uncorrected misstatements in the financial statements will be avoided, and the fraudulent transactions will also be eliminated. Therefore, the cash and bank balance will not be under or overstated. So this will be the direct control. And how can you test that? In the same way as how you usually used to do in the normal question. You need to write the procedure here. So you should be specifying the document or information required, plus the purpose for which you are doing this procedure should also be properly specified. So you can mention that review a sample of or copies of bank reconciliation statement in order to confirm that they are being prepared on monthly basis and are being reviewed by a senior official. So same as that, consider in the scenario it is mentioned that the human resource department and the payroll department of Allen Company is different, and only human resource department employees will appoint the staff members to the company. So we can explain it as there is proper segregation of duty. The possibilities of having fictitious employees will be avoided. Therefore, the payroll expenses will not be overstated. So how can you test that? We can inquire with the sample of newly appointed employees whether they were appointed by the members of HR department, or you can review the copies of appointment letters of a sample of employees who were recently appointed in order to confirm that the appointment process is done and the appointment letters were circulated by the members of HR department. Or you can also inquire with a sample of employees in the payroll department whether they were given any opportunity in appointing employees to the company to understand whether there is proper segregation of duty between HR and payroll department. So this will be the way in which you will be presenting each of the direct controls and their test of controls. So whenever you write the direct controls and test of controls, make sure that you are identifying each of the direct control, that will be the strength in control, explain why it becomes a direct control and show the impact on financial statements. And while writing the test of control, make sure that you are clearly specifying the procedure, and whatever be the document or information required, that should be provided. Plus the purpose for which the procedures are performed should also be clearly specified. So this will be the way in which you will be identifying and explaining each of the deficiencies, recommendation and test of control, and you should also be referring to the direct controls as well as the test of controls. So while writing the answers, always keep this one in mind. Either you will be getting a question on deficiency and recommendation, or else you will be getting a question on direct controls and their test of controls, or also there can be possibility of having questions relating to deficiency, recommendation and test of control, direct control and their test of control. Either way the examiner might ask you, so you should be familiar with each kind of questions from the scenario and you should be focusing on the scenario, and definitely there will be more deficiencies in scenario than what the examiner have actually asked you to pick and explain. So you should first of all read the whole question, identify and highlight all the deficiencies and all the direct controls from the scenario, and then after prioritizing the deficiencies and direct controls on the basis of your knowledge, you should start writing with the answer. So you should not write the answer correspondingly while reading the question. You should first of all read the full question, identify all the deficiency and direct control, then only on the basis of your knowledge, which one you believe to be the one which you can explain properly should be given the first priority, and that should be given as answer. And always stick on to time, do not overwrite, make sure that you are clearly giving answers to each of the deficiencies, recommendation, test of controls and direct controls and test of controls. So well, we have practiced all questions of direct controls and test of controls as well as deficiencies and recommendation during our live session, during our regular session. And this was just a quick revision in the way in which you need to present the answers. So please do revise all the questions that we were discussing in our regular session. Make sure that you are practicing all questions using ACCA's practice platform itself to get familiar with the platform. And also in addition to that, make sure that you are familiar with almost all the latest questions. Please do go through all the important and latest questions as we discussed in our session. Okay? Alright. So in the past days, we were discussing about all our core areas of our syllabus AA. And basically when it comes to the paper AA, we know that anyway we can expect a question from the area of internal controls, audit risk, substantives and reporting. So make sure that you're familiar with each one of these cases and do practice maximum questions as possible. Do write answers and make sure that you are sticking on to the time. Do not overwrite. Make sure that you are following the time and you should spend only allowed time for each of the questions. Make sure to attend all the questions as possible. Okay? Alright. So once again, do revise all the areas, practice and make sure that you are writing answers specific to the scenario. Do not write general points. Make it specific to the scenario. Do not by heart the answers which are there in the revision kit. Make sure that whatever be the things that are mentioned in the scenario should be clearly specified in the answer as well. Okay? So all the very best everyone. Do well for our upcoming exam and make sure that you score good grade in the paper AA. All the very best. Thank you so much.